We've had a fire that's been burning for a while, mostly fueled by lower rates, or since the financial crisis. And I think we're hoping that the economic growth kind of takes up and becomes a fuel of that fire, as the expectation is that lower rates will begin to ebb. So I think we could have had a market that was in serious trouble if we saw rates go higher as many expected, or if we saw wage inflation go higher. So far, it's a bit Goldilocks, and perhaps we have more room to run as those, call it headwinds, haven't really come to fore. But as you mentioned, certainly we may see it coming in the future. When those headwinds do come to fore, sorry.
No, I was going to say, Kate, does it feel Goldilocks-y to you? Does it feel that way in the Valley?
Well, we're having a typical foggy summer, as you can see, in San Francisco, but the markets are still pretty hot. And yes, it does seem that way. But I will say we do start to see a tale of two cities, in that good companies, public and private, are still doing really well because their fundamentals are doing really well. Apple, Amazon, et cetera. Apple's about evidently to launch some new products soon, 3 iPhones this fall. There's more upside. I think the thing you start to see is two things. One, companies like Tesla, that hit some bumps. Facebook gets severely hit. So we see the same thing in the private markets as well. If you're doing well, everybody loves you, and they may overprice you. If you're not doing well, you'll be pretty severely punished. And the other thing we think about here is what's not here, is what's going to happen with the Chinese market, what's going to happen with the European markets, what happens with these trade, barriers, what happens with Brexit. Any weakening in the customer base for any of these products would be something we'd have to really be careful about. Otherwise, things remain pretty sunny.
Kate, I wanted to dig into that a little bit more because at scale, you're invested in quite a number of companies that are focused on enterprise and focused on business. We got a really strong consumer sentiment reading this morning. But what are you seeing through the lens of being invested in these companies in terms of business confidence?
I'll tell you, business confidence is surprisingly strong, and I think you see that in the fundamentals of all the customers. We've invested in companies like Box and DocuSign. Salesforce is going to release earnings soon. Workday is doing really well. Businesses continue to use technology both to save costs, to give more technology to their workers. You see what's happened with Slack. We can talk about their staying private in a minute. But you see overall enterprises saying very, very confident. That's really good for those enterprise-focused tech stocks and the enterprise side of big companies like Amazon with AWS, Microsoft, and so many others.
Mike, I'm curious, we had a conversation this morning about the best August for the Nasdaq, potentially going back to 2000. And we talked about what August was like in 2000. Sure. A viewer reminded us that it was really a mid-quarter warning out of Intel that helped derail a lot of that. It's is it hard to envision something like that happening again from a company that influential?
It's hard to envision something like that triggering as big a debacle, right? You just don't have as much kind of built up excess and really this unwieldy mass of market value based on very little fundamentals. That's what you had back then. Also, you did have, this kind of fake corporate earnings treadmill that we were on back then. I'm not going to say you have anything like that right now, but every single company we talk about is reporting an adjusted earnings figure right now. I mean, you're getting there in very small pockets of the market, but no, I don't think that it's quite as fragile as it seemed back then.
Tim, would you go along with that?
Yeah, I'd absolutely agree. I mean, certainly back then you had so many more companies that were gaining large market caps with really no revenue and no earnings. And right now, if you look across the space of what people might think are overvalued, you at least continue to have revenue growth. I would also echo what Kate said, in that if you begin to see some of these, overseas markets begin to weaken more, that is part of the total addressable market for some of the highest flyers. And that might cause a rotation from the highest flyers really down to those with better revenue and earnings here domestically.
Before we let you all go, Kate, I just want to follow up on the comment you made about Slack. And I know it just closed another round of funding. This idea that you have these so-called unicorns staying private longer. Your thoughts on Slack?
Well, Slack's such an amazing company. It's done so well. I don't know about you, but my inbox has become almost unwieldy. And if I'm working with people instead, it's so much more efficient for us to communicate inside or outside my company using Slack. So there's a good reason they have 8 million users, 3 million paying customers, and some of the largest companies in the world. But also not surprising, therefore, that they have their choice of where to get capital right now. Everybody's looking for return. They don't need to necessarily go public. He looks at some of the challenges that Elon Musk is facing. People are making as much money off of Elon's errors, unforced errors maybe, as they are in Tesla's growth. And I think if you're Stuart Butterfield, you're thinking, gosh, it's so much easier to plan for long-term growth if I stay private. And there's so much capital knocking at my door. I think you continue to see that across the unicorns. Again, capital is looking everywhere it can for return, and it's very happy going into the private markets so far.
Huh. That's going to be an interesting contrast going into a year where we're expecting some high-profile IPOs.
Yeah.
We'll find out.